Hi, everybody. Welcome back to Ox Talks. It's Friday, August 2nd, 2024. Appreciate you guys tuning in today to watch the show. Please subscribe to my channel if you're not subscribed. Share the videos with as many people as you possibly can, especially younger generations, people that are they're just starting out, that are maybe looking to buy a home, maybe looking to invest in the stock market and do all these things that the mainstream media says that you should be doing as part of a normal investment life and maturing. We need to exercise a lot of caution right now with what's going on. So again, thanks for being here. Please subscribe if you're not subscribed. Hit the thumbs up button for me and the bell notification. Let me give you a quick, and by the way, yes, back in Ox Talk Studios here at the office after about 22 days from being away from this location to record a show. It does seem like it's been quite a while. Let me give you a quick market rundown today of the various, let's say, the stock market. Number one, Dow fell 610 points, which was 1.51%, closed below $40,000 in the 39,000 level-ish. That is following yesterday's big sell-off as well. So it's minus 610 on the Dow. At one point this morning, it almost was down 1,000 points. I don't think it touched 1,000, but it was close. And they got the cavalry to come in at the end of the before market close and get it back a little bit. Still, huge sell-off for the week. S&P 500 lost 100 points. That was 1.84%. And the NASDAQ minus 417 points, 2.43%. And it's fallen below the 17,000 level. The 10-year yield closed out, what I saw, 3.79%. Just a few days ago, it was like 4.25%. So there is a huge sell-off in the bond market. I say sell-off, meaning you have yields dropping, which means that people or something is buying a tremendous amount of debt right now. The VIX, the volatility index, spiked today. It was well over that threshold of 20 where it becomes real concerning. Oil was down to $74 a barrel. That was 2.84%. Bitcoin fell 2.2%, down to 61,800 level as of the time I'm recording this video. Gold was up this morning big, and then it came back, dropped about $20, finished $3 down for the day, and silver finished up 9 cents, just under $29 an ounce. Gold strongly still over the 2,400 number. Interesting given what we're seeing here. I'm sure there was a lot of liquidation today to cover margin calls and to raise cash due to the market sell-off. Obviously, the big news today was the payrolls report that came out this morning. I pulled the story off of Zero Hedge and of CNBC. I'm actually going to briefly share the CNBC story with you. But this is a potentially a watershed moment for the market, for the economy, because it spells real trouble. Is this going to force the Fed to come in and maybe make some kind of emergency rate cut before the September meeting? There's a lot of pressure right now. You had a couple of senators coming out today and trash talking Jay Powell for not making a sooner decision. This is the playbook, guys. We know this. The Fed always plays from behind, and the question is it intentional? I mean, if you look back at historical patterns, the Fed always shows up late. Is it because they don't see it coming, or is it because they will only step in when the market literally starts crashing? Well, we will see. I saw Manarino's report this morning, and he was saying, look, it's an opportunity to buy as long as that 10-year yield is going down. Look, I am no market expert. I'm not questioning anything anybody else says, but I'm saying you might want to exercise some caution here, because is this the beginning, to go back to the title of the video, is this the beginning of the purge, so to speak? Is this the beginning of the downfall? This has been a long road up to these lofty, in the cloud levels on the markets, and it's going to be that long of a road, and probably a longer road as it goes back down. So what side are you going to be on? You're going to keep buying the dip, assuming it's going to go up, or are you going to exercise some caution and see kind of where this is at going into next week? So non-farm payrolls from CNBC today says, job growth in the United States slowed much more than expected during July, and the unemployment rate ticked higher, fueling fears of a broader economic slowdown. The Labor Department reported Friday non-farm payrolls grew by just 114,000 for the month, down from the downwardly revised 179,000 in June and below the Dow Jones estimates for 185,000. The unemployment rate, this is important, edged higher to 4.3%, its highest since October of 2021. You've already got, the talking heads out saying, well, that unemployment rate is really kind of a misnomer, is misleading because of the hurricane issues and evidently, a slowdown in labor because of the hurricane. I find that hard to believe. Again, I'm just giving you my 2 cents here. I wouldn't be surprised if the 4.3 is even a much lower number than the actual number. Okay. Average hourly earnings, a closely watched inflation barometer, increased 0.2% for the month and 3.6% from a year ago. We know that earnings are not keeping up with inflation and the cost of goods, so that's pathetic. Both figures were below respective forecasts for 0.3 and 3.7. It says stock market futures added to losses following the report while the Treasury yields plunged. The labor market, it says, had been a pillar of economic strength, but recently shown some trouble signs, and the July payrolls increase was well below the average of 215,000 over the past 12 months. Of course, the 215,000 number always gets revised down several times in the following months as well. So look, don't drink the Kool-Aid, guys. You understand that this is the best they can do. This is putting lipstick on the pig, so to speak, right? It says from a sector standpoint, healthcare again led in job creation, adding 55,000 to the payrolls. Says though markets on Wednesday cheered indications from the Fed that that an interest rate cut could come as soon as September, that quickly turned to trepidation when economic data Thursday, that was yesterday, showed an unexpected jump in filings for unemployment benefits and a further weakening of the manufacturing sector. We covered the manufacturing data on yesterday's show. This is what triggered the worst sell-off of the year on Wall Street and renewed fears that the Fed may be waiting too long to start cutting interest rates. Easing wage gains could help policymakers feel more comfortable that inflation is proceeding back to their 2% goal. Let's talk about the SAHM rule, SAHM. I've raised it on this channel before. It says the rise in the unemployment rate brings into play the so-called SAHM rule, which states that the economy is in a recession when the 3-month average of the jobless level is half a percentage point higher than the 12-month low. Okay? Again, I'll repeat it. When the 3-month average of the jobless level is half a percentage point higher than the 12-month low. In this case, the unemployment rate, it says, was 3.5% in July of 2023 before it began its gradual ascent. The 3-month unemployment rate, it says, has now moved up to 4.13, and that they're saying has triggered the SAHM rule. So go look it up, you guys, Google it. You can read what it is and what it means. But what it means, according to that, if you understand it and you believe in that definition, that we are now officially are in a recession. Okay, so long-term unemployment also ticked higher. Those reporting being out of work for 27 weeks or more totaled 1.54 million, the most since February of 2022. Guys, we're in terrible shape. Give me your comments below. Are you having any issues with employment? Have you lost your job? Have they cut your hours? Are they trying to kind of force you out the back door with putting some other kind of pressures on you internally? We discuss all the time on this show. I know it's easier said than done, but if you are beholden to a 9-to-5 job where you have a boss and you do not control your source of income, I would highly suggest and recommend that you do your best to find an alternative source of side revenues, a side hustle of some sort. Do something to create some security for yourself in the event that you are one of these unfortunate statistics, one of these people that gets laid off. I'm hearing it from all sectors. People are having these things happen to them. Do not think for a second that your job is immune from being cut, or your hours are immune from being cut, or you're immune from getting your walking papers, even if your performance is exemplary, right? You just don't know what's going on with the economic pressures of your boss or your employer behind the scenes, all right? And there won't be much warning. End of the day, they're all going to look out for themselves. And if it's a larger company, their shareholders and their corporate profits, and you are going to be a potential casualty of that scenario and that circumstance. This is going to keep getting worse, folks. Is this the beginning of the purge again with the markets and with some of these asset classes? I don't know. I don't have a crystal ball, but I would say caution is certainly the word of the day. It's not panic, go and liquidate everything. But if you keep seeing this sell-off, how long, if you're in the markets, I know that is not, for the people just trying to get by day to day, they're not worried about or concerned about, nor do they have ownership in Apple stock or Intel or Amazon that have been getting beat up the last couple days, or these chip companies. I get it. But it is a broad indication of where things are heading. And like I said yesterday, the people that are in the stock market a lot of times are the ones that are creating the jobs for other folks. And if they start hurting and they're a small or medium size or mom and pop business, this can have an impact on what they do, right? If they're losing their fortunes in the stock market and their portfolio is tanking, that's going to reverberate down to their business operations, their plans for the future, their capital expenditures, and all those kind of things. So again, please heed this. It's very, very serious. I won't go too long today. I've got to run to my workout and then meeting the family for a bite to eat later on this evening. I'm going to try to do the live stream this weekend. I know I said that I'd start it in early August. I want to get that organized, so I'm going to do my best to make that happen tomorrow if possible. If not, maybe Sunday, but we will get that up and running. Just take the weekend to obviously spend time with family and loved ones. Try to detach if you can from the stress of the day-to-day work. I know it's hard. I was just writing out my bills, my medical insurance and the auto insurance, and these numbers are literally in the stratosphere. And so I know you guys are all feeling this pinch at whatever level you are at, okay? So I was going to say, spend some time with family. Don't neglect, getting some physical activity in over the weekend if possible, but work on your financial situation. Sit down and start to figure out where you're at with your assets, with your debts, with your credit score, all those kind of things. Oh, by the way, when I was in Italy, I got a fraud notification that my business account had been hacked, and somebody had purchased a computer for $2,000 up in the state of Washington on my debit card while I was in Italy. Obviously, it wasn't my charge. They had to cut the card off. I don't know how the number got swiped. I did use that card one time. I used my American Express card in Europe for basically all my transactions. That was safe, but my debit card I used one time because I left the American Express card in the safe in the hotel, and it got picked up. So now I'm having to get a new debit card mailed to me. All those things that are processed with a debit card are attached to it. My court filings all has to be re-entered and redone. So need to watch this stuff, the fraud. I was down talking to my bankers today. They said fraud is literally rampant right now. So please be combing your bank statements and your credit card stuff, and make sure that you are not the victim. To the extent that you can, make sure that you're not falling victim to these fraudsters. As things get worse, the crime and the fraud is going to get worse. I think we all understand that. So be vigilant, be diligent. Have a great weekend. Hopefully, I'll be able to talk to you again tomorrow or Sunday on a live stream so we can discuss some current events. I can field some questions from you guys. With that being said, have a great Friday evening and a start to the weekend. Glad to be back home and with all of you. God bless. I'll talk to you soon. Bye.